Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Good afternoon, good morning, everyone. Thank you very much for tuning in to the show. My name is Jeff Barton, and this is The Mortgage Voice. We have a telephone number if you'd like to write it down and call us after the show to get your questions answered. I'll call you right back. 888-713-2929. That's our telephone number. It's active all of the time, and if you have a question now, next week, the week after, just keep it handy because getting answers to questions when you immediately need them is extremely important, especially when you finally get that house that you really want, and the agent looks to you and said, okay, where's your pre-approval letter? That's when you're going to need to know where do I get one and how does it work. On the pre-approval process, it's really quite simple, but give that number a call, that 888-713-2929 number, and we'll be able to either hook you up with myself or one of the tremendous loan officers that work at Malibu Funding, the company that sponsors the show. And if you go to their website at www.malibufunding.net, you can go to the About Us or the loan officer page. There's probably 40 or 50. I guess we have about 60 or 70 different ones that now work at Malibu in the 10 different states that we are licensed in. And of course, all of that means that it is of benefit to you because you have a great many different choices. Choices in the real estate world are always important, and you always want to make sure that you're 100% prepared when you do want to buy that house. What is happening in the mortgage world is the rates have really fallen. And when I mean fallen, I mean 2011 rates. Why is that? I guess it really doesn't matter. If it drops a quarter point, you're going to be able to afford another maybe 50, 100 grand. Every point drop means that you're that much closer to your house. Although real estate prices have increased, we're kind of looking at a market right now, which is end of summer. We're in mid-August 2019. And what that really means is that we're having most of the people who have to move have moved. Most of the people who had to have purchased a house or rented a house because children are going to school have done so. Let's face it, school opens in a lot of places next week. Even some places in Southern California have already opened. And I'm not sure why they do that, but summer vacation is now only 2 months long. And those people in California who have to make those decisions about where to live and how much they can afford and all that great stuff that we talked about earlier in the year, certainly in the spring buying season, have already come to pass. And as I said, you're in your new house, you're happy, but rates have fallen. So if you're looking at a rate right now that you got 90 to 120 days ago that is about 3.875, you've just dropped your rate by a quarter point. It's at 3.66%, which is unbelievable considering we were looking at rates a year ago. I was thinking rates were going to be at 5.25 by now, but they haven't been. What affects rates? What affects the ability of the market to determine rates, and how global events really affect supply and demand in this weird way, in this weird kind of economy? Everybody knows we're in a trade war and not quite sure what that means, except if you shop at Walmart or you shop at Sam's or Sam's Club or Home Depot or any of these places which have products that have been made or purchased with China stamped on them, made in China or distributed through China. The reason is that what has happened since the beginning of the year, actually late last year, is there are really literally tens and thousands of products that have tariffs. And what a tariff is a tax, really. It's a tax placed on those goods, making them more expensive here so that local goods can be more competitive. I mean, that originally was the way it was. And currently we have many, many thousands of products being imported from China, not to mention agricultural products, which are affecting your farmers, automotive products, which are affecting, obviously, anything that is being sold here in the U.S., but also manufactured in Mexico or Canada or any number of other countries which put together products for us. And then they're sold or distributed here in the U.S., and that would be, of course, your Toyotas and anything that's got a Porsche label on it, a Land Rover, all these type of products that bear Chinese goods being made in China, sold to distributors or to other companies that then sell in the U.S. market have had tariffs. Now, how does that affect you? I'll tell you how it affects you. If you're paying more for products, you can pay less for your mortgage. It's that simple. And I'm not talking about huge dollars here. If I say that the rate in your mortgage went from 3.75 to 3.50 and that you can now afford closer to another $100,000 in your mortgage because the rates went down, that's a big number. So if that number that you can now afford because the rates dropped, well, guess what? You can't afford it because you've got to pay that much more in products you're now purchasing with tariffs on them. That's why it's an important thing to you. So affecting you, affecting your purse, your pocketbook, how much you can afford on a mortgage means that you can afford that much less or more depending on, how much of this stuff you're buying at Walmart based on the house you're going to want to buy or you've already purchased. If you've already purchased and you want to refi it because you want to take advantage of the dropping rates, well, that's a good thing. But if you're paying that much more in how much you're buying at a discount at some of these stores, which are no longer a discount because the tariffs are there, that's affecting your refinance abilities as well. It's not complex because you can see it when you go into the stores. It's not complex with the rates because you can also see that when you're looking or talking to your mortgage person at the bank, your mortgage broker, your mortgage banker, whoever you talk to about these kind of things. That's why the global trade war that's happening is extremely important. Quick and brief lesson on history. Back in the Clinton days, and the Clintons have been in the news a lot lately for many different reasons, and this is one of them. The globalization of the world economy really picked up steam during NAFTA, during the trade concessions made with China, and also the opening of the European currency, the European Union. All of these things globalize supply chains. What does that really mean? That means that if I have a company in the U.S. and I'm looking to build things cheaply so that my profit margin is larger, I look to where I can buy those things as cheaply as possible. So if there's no tariff on a bumper that's made in Venezuela and no spark plugs that are made in Manchuria and anything else that is man-made down in China, that means that obviously I can source these products all over the world because there's no added tax based on trade wars, the ones that we're currently experiencing. Now, that's an important distinction to then to now. Clinton was the one that really pushed all that stuff through, and he was the one that really ushered in globalization of trade. Now, whether you're for it or whether you're against it, the fact is that we are reverting to a time prior to that when we had trade barriers, i.e., taxes on items in order to make local items more productive and more competitive. That's why it was turned on. Although this administration is putting tariffs on Chinese goods primarily, and he threatened to do it with Mexico until they redid the NAFTA deal. Same with Canada. The reason he's doing it now is simply this. He wants to make China accountable for the generations of, appropriation of U.S. patents, the stealing of products, the unfair trade advantage that China has because they have an economy which is controlled by the state. China's markets have never been open. This is Trump's way of punishing them. However, when you consider how much you can and can't afford on your mortgage based on how much more money you have to pay on products that you buy every day, that's an issue. Anyway, I'm Jeff Barton. I'm your voice in the mortgage industry. Thank you for tuning in, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929, telephone number. Got questions, got answers, got problems, got solutions. You can give that number a call at any time now or when we're off the air. We're going to try to help you get to the solutions that you need and answer any questions you may have about the process and what has happened to both the real estate market in general and also the mortgage rates have really come down. We do that with great people that we bring on the show, professionals that know way more than I do and also have got their ear to the ground, nose to the grindstone, and working extremely hard for their clients. With us once again is Jennifer Conrad from Malibu Funding. Jennifer, how are you?
I'm doing well, Jeff. Thank you so much for having me.
And thank you, too. How are you doing, and how is your business going?
Actually, business is going very well right now. There's still a lot of purchase business, but I had a couple of buyers or previous buyers who've resold around to me to just ask if they could, start looking into refinancing. So that's a great market right now.
And you know what? You said refinancing. I was just talking in an earlier segment about that. We have rates now below 3.75 on 30-year conventional, and FHA, VA, they all follow suit. That's a pretty extreme drop from where they were at the beginning of the year, right?
That is correct. I was actually quoting people more like 4.875, and in some cases even as high as 5.25.
Right.
On conventionals. And so now to see, I literally have a refinance I just put in at 3.75.
Right.
So, and it's, amazing. Couldn't even believe it.
No,
Along with having the appraisal waiver. So my clients were happy to not have to pay for an appraisal, but to have the appraisal waiver as well.
Oh, good point. Talk to the listeners about the appraisal waiver on, and I don't know if this is an FHA Streamline or some other type of product that waives that. Talk to us a little bit about that and how that is a great savings.
Actually, with the appraisal waiver, and since normally the appraisal is going to range anywhere from like 4.75 to maybe 5.25. If we're looking at a loan where it's conventional and we have a reasonably lower loan to value, generally speaking, it's usually under like 75% LTV.
Right.
A lot of times the DU system, desktop underwriting system, will automatically say that we do not need to have an appraisal because they accept the value that we put in as the actual market value for that area.
Okay.
So a lot of it is just paying attention to, going on to some of the websites to actually get a good feel of what we think the home might be worth before we actually start. So in that case, it saves the borrower that money. It's just one disclosure they have to sign. The underwriter accepts that, and then we just go from there. And this is a cash-out refinance that I'm doing, like I said, that has the appraisal waiver. Now, with the FHA, you have the Streamline without an appraisal, and generally speaking, that just means we're going to pay off the current balance and 1 month's interest. So the borrowers do end up bringing some cash to close, but again, they don't have to have an appraisal, and that could work to their advantage if it's a possibility that they don't think that they're going to have enough value in the property in order to be under 85% loan to value. So
let's talk a little bit about.
We have those two options.
Yeah, the valuations. Reading an article today talking about how house appreciation has slowed somewhat, and there's some nervousness out there, given that we've had a slight uptick in foreclosure rates and also in delinquency rates. That they're a little bit nervous about the market going forward into next year. What's your feeling on that?
I can't necessarily say I have a strong opinion on that because a lot of what I've been doing is new construction. And then, like I said, just recently with people coming in with the refinances. But, I would have to say, obviously whatever professionals are saying regarding that is something to pay attention to. But, for my people that are refinancing, that have reached out to me, they've kind of been in their property for a while, so I don't really feel like that might be an issue regarding them. And then, like I said, with most of our purchases, it's new construction.
Yeah, I agree with that. I think that in the market that we're currently in, people who have lived in their house for, 3 to 5 years or longer have built up a lot of equity. I mean, as we've seen,
They do.
the house prices have gone up and the sales comps have gone up, which means the equity in most homes has also gone up. So it's kind of a shield against anything like that. So you're doing loans in a number of different states. What are some of the advantages that you have because you have a little bit broader perspective on what's going on in, let's say, Florida or Illinois or California, all these different places as to someone who might just be working locally?
I think in the fact that I know that we have certain programs like in Illinois where we might have more down payment assistance programs for teachers. Or like in Florida, if we have people who want to purchase here who are foreign nationals, then I sort of, have connections there where we can get that done. Even in Texas, I noticed, we have a lot of people who are foreign nationals who are wanting to purchase there. And then obviously in California, the fact that we have down payment assistance programs here as well. So the fact that I have an opportunity to work in these different areas and then be aware of, certain places where we consider it a wet state, when we have our buyer and our seller right across the table from each other and it's necessary for us to fund at that time, or a dry state where you don't have the buyer and the seller right there, everyone's signing papers, but we're given a little bit more time to be able to record and then keys are exchanged. So, that takes a little bit of pressure off. So that helps in being prepared, when we're actually starting the loan process so that I can make the buyer aware of what it is that they're going to be going through.
Yeah, that's a very good point, and I think perspective is always good. Knowledge in more than one area is, again, additionally good. You're a working mom, and you have more than one career going. How do you balance it all?
Get up early and stay up late.
Okay, all right, we'll go old school. All right, nose to the grindstone. Don't complain. Yeah, no, I understand. I just know that in our audience, listening audience, we have a lot of working moms. Most two-family incomes. It really stretches you in many, many different ways. I think it gives probably you an advantage over some others who may be doing this origination process in that you can understand some of the stresses and pressures on people who are not only doing that, but also trying to buy a house.
Right. I definitely understand that. I think, it's about managing. It's about managing time, being very conservative with finances. Especially in this line of work, so like you're saying, it does, make it a situation where I can share with people, and I do try to share with people when I'm starting, the whole process to let them know, like you said, I am a single mom. I originally left Virginia and came to California, made a pit stop in Illinois for 10 years, and so it's just a matter of, and I started my business actually in Chicago, and so I've had an opportunity to be able to expand since then. But it is about being conservative. It's about paying attention and always trying to sort of be ahead of the curve and know what's out there and be familiar with it so that I can share that with other people. And a lot of times reaching to people and saying, maybe you didn't know that this is an option, and then building and fostering those relationships so that people can remember to come back to me instead of going somewhere else, because then at least they know I'm not trying to take advantage of them,
Right.
but I'm actually going to try to give them the best possible deal, and I let people know I'm going to do for you what I would do for myself.
No, that's good, and that's the philosophy, I think, that of the people you work with, and I appreciate knowing that helping others is really at the core of what we do. Getting people into a home, a house, roof over their head, that sort of thing always gives someone like myself, yourself, pause so that they can do the right thing as opposed to trying to maximize the amount of money you're making on each deal. No, it's not about that. It's certainly a way that we all earn a living, but they're at the heart of it, and I think that you exemplify this, is the desire to help people. You know what I mean? I think that is what you bring, and we always appreciate it. Hey, listen, we're up about a minute left. Could you tell people how they can get in touch with someone who's got your experience and obviously a terrific loan officer as well?
Well, thank you. My number, you can reach me, is 773-593-6831, or you can call the office and ask for me, 818-719-9901.
Okay, thank you very much. One quick thing. School's beginning soon. When does it begin in your area?
Dylan started school on Monday.
Oh
This
boy,
past Monday.
oh
Yeah.
wow, nice summer vacation. It wasn't. Oh my.
It was very short, but the moms out there will understand when I
Yep.
say I was ready for school to start.
I know, and I remember those days myself. Jennifer, thanks for coming on the show once again. I really appreciate it.
Thank you so much for having me, Jeff.
Okay, very good. And that's Jennifer Conrad of Malibu Funding. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry, 888-713-2929. That's the telephone number to write down because you're going to have questions. We're going to have solutions, and in order for us to give them to you, you have to give us a call. Or you can email us, info@malibufunding.net. You certainly can follow me on Twitter, Jeff6493, and certainly our YouTube account. If you go to YouTube, our channel is Jeff Barton, the Real Estate Voice. And we have this as well as many other shows there, which you can hear past interviews or the current interview for that week. We're on KCAA, KMET, and K-Tahoe, some great radio stations, which we've been on for some time now. We get probably about 50,000 people a week that listen to the show, either here, online, or any number of other different places, iHeartRadio to mention one of them. We're real happy with the response that we're getting from the audience and from the guests that we bring on the show. There seems to be a great deal of satisfaction. Another one of these people that come on the show periodically to tell us about what's happening in both the rates and programs is Bill Orr from Malibu Funding. Bill, how are you today?
I'm great, Jeff. How are you doing?
I'm fine, thank you. I appreciate you coming on the show. And I wanted to ask you before we get going, the economy and what's happening globally and how it affects both the psychology of the borrower or the actual rates. Do you have any thoughts on any of that?
Yes, I do, and I actually did a little research before we jumped on the call today. So, to people who are listening, and we've all heard the real estate term, location. Right now, today, in August of 2019, the buzzword is refinance.
Uh-huh. That's true.
So, all the homeowners out there right now who own a home, now is your time to call Jeff. Now is your time to call me. Now is your time to call your favorite mortgage lender and really take advantage of these ridiculously low rates. And also, obviously, if you're a potential first-time home buyer, any person looking to buy a house, the rates are just phenomenal right now. So, if it's okay with you, Jeff, I kind of wanted to give like a little background about where we are today and kind of
do it. Do it. No, I
here.
appreciate that because I listen to many people on the radio myself, as well as read up on it all the time. And it's fascinating where we were, where we are, and where we're going. So, yeah, let us know.
Well, let's talk about, so the Fed Reserve cut rates last week or so. And that's really important because those of us who went through the meltdowns, for all the homeowners there or all the people who are listening, who, if you remember the mortgage meltdown in 2008, and how horrible the economy was. This is the first time that the Federal Reserve has cut interest rates since then. So this is huge.
Mm-hmm.
Then the question is the why. What's the why? The why is the China trade escalation, all that mess. So we are not going to talk politics here. We are, however, going to talk, about what's really happening. So as this issue with China continues to escalate, it's sending absolute shockwaves to the business community.
Yep.
And so much so, the Federal Reserve said, we better get a jump on this ahead of time because it's not looking real pretty. So they did a Fed reduction in rates in anticipation of this war is the wrong word, but you know what I'm saying?
It's a trade war. That's what they call it. Yep.
And things like that.
Mm-hmm.
It's going to be bad, and it's going to be, from what I'm seeing, long. So much so the Federal Reserve had to jump in and say, we're going to have to artificially lower rates to keep the U.S. economy on track.
Now, can I just interrupt you for a second? Sure. Philosophically speaking, now, and this isn't that kind of show, but just philosophically speaking, when you get into a situation where a protracted trade war is going to go on, are you thinking in terms of leadership or whatever else is affecting us, which, of course, is this, and whatever, if you're going to buy a house, it's going to be the mortgage rate. Do you think it is prudent for any leadership to lead us into a situation where the volatility is such that people are scared and not quite sure what's happening with their job, the future of mortgage interest rates, although they have gone down, or other investments that they may have, stock market, bonds, whatever? Just philosophically speaking, do you think that's where we are or where we should be going?
I think it's horrible.
Yeah,
because I don't know that this is a real war, a real economic war. I want to emphasize economic war,
of course.
As opposed to pounding his chest and huffing and puffing and making this worse than it probably really is.
Right.
Now, in as much as how much does this trade war affect the average consumer living their life? Maybe not so much. Because it's not like an imminent threat, somebody knocking at your door.
Mm-hmm.
But I don't know if this is helping us out big picture because it's really hitting the farmers and other people throughout the country and the manufacturing who are going to be affected by this trade war.
Mm-hmm.
But as it gets down to if you're listening to this radio show, how does it affect me? How it affects you is interest rates are doing great.
Right.
If we kind of get away from the doom and the gloom of this China thing, and let's talk about how it impacts. If you are listening to the radio show right now, it's phenomenal.
Right. Mortgage interest rates are great, unbelievable.
3%
right.
On FHA, mid to high 3% on conventional mortgages.
Yep.
Which is phenomenal.
Right.
So it's having a big impact, and I want to encourage people to call their lender, and here's why. I've had 2 conversations today and a couple throughout the course of the week where, for a couple of different reasons, maybe credit, the client wasn't really able to get the rate that they thought. But if you call your lender now and say, let's talk about this right now, am I in a position to do this right now? Because what I'm seeing is that these rates are going to be low for probably the foreseeable future, probably a year or so, which means if you call today, there's a problem with your credit, a problem with your income, whatever the case may be, your lender or me or Jeff will have the ability to work through that with you, give you some guidance and advice as to how to overcome that. So even if it takes you 30, 60, 90 days to fix whatever that problem is, then you're still in a situation where you can refinance. So the clients I have, they just have to fix their credit, which I'm going to help them with, and pay their bills off and do something called a rapid rescore, which any lender can help you with, and help them refinance and really lower their payment. The 2 clients I quoted out this morning, these were not like loan amounts. One of them is saving $343 a month. The other one was saving $448 a month.
That's a big number.
An FHA mortgage into a conventional mortgage.
Yeah, that's a big deal. And I think equity have risen enough in the last 2 years. If you had an FHA, getting out of that into even a lower rate and lower payments, get rid of the MI, that's a big deal.
It's a huge deal.
Yeah. Yeah, I totally agree with that. Where do you so you're thinking for a year or so we're going to have rates like this? I'm not sure, but I think I agree with you. I think we've got the election season coming up, which always affects, meaning that nothing's going to happen in Congress if it ever does. But I think that the ability of the president to continue the trade war will keep interest rates low, and I'm not quite sure I understand the economy or the economics of why that is.
Right.
But I think that is true.
And I'm basing it, and I forgot about the election component. You're right. The current administration is going to talk about how their administration is keeping the rates low, and they can certainly do that, I guess. But I was looking at, the reason I was encouraging people to call the lender now, because I'm seeing that there, could possibly be talking about more rates lowered in the future, which means that's what made me think it's going to be a long period of time. So if you're going to think about buying a house, if you want to refinance, call your lender, call me, call Jeff.
What's your number, Bill? Shout out your phone number so people know how to get in touch with you.
Yes, my phone number is 818-4 818-406-4744. Again, that's 818-406-4744.
Bill, thank you very much. Just one last bit of
Sure.
information, if you could just let people know, demand in the housing, has it gone up or down?
Demand is up from what I can see because values are going up. I mean, my personal house where I live has gone up. I checked on that, and
Right.
a few of the key clients that I spoke to this week, everybody's up.
Okay.
Everybody.
Okay.
So it's so setting aside the gloom and doom of the Chinese economy issue.
Right.
Trade war, housing prices are up, home values are up, interest rates are down. It's
Right.
just a phenomenal time to be a homeowner, or hope to be a homeowner.
Bill, thanks for coming on the show. Once again, really appreciate it. Great information. Once again, thank you very much.
Thanks so much, Jeff.
Okay. That's Bill Orr from Malibu Funding. I'm Jeff Barton, your host, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry, 888-713-2929. Our telephone number. Write it down. Call us later. Hold on to it. The questions you're going to have when you're thinking late at night and trying to worry yourself to death if you can afford what you want to buy, that's when you want to pick up that phone and give us a call. We have a lot of great people that work for us at Malibu Funding. Malibu Funding is the sponsor for the show. That's the company I work for, and I really appreciate what they do for both consumers out there, borrowers out there, and it's a good place to work, and again, I do appreciate it. This show doesn't always do commercials for themselves, but I just want to give it a little plug because so often you're on the radio, you're driving around, and you just don't know whether the person on the radio is telling you anything that you care to hear about. But if you hear anything, hear this. The website is malibufunding.net. There's 40 to 70 different loan officers on there. One of the great loan officers who works for Malibu Funding in the state of Arizona, but all over California as well. And she does a product that you may or may not know much about. It's called the reverse mortgage. Nina Penny joining us again. Nina, how are you?
I'm doing great, Jeff. Thanks for having me.
Thank you for coming on the show. I appreciate what you do and your expertise in your area. You obviously do forward mortgages, but tell us a little about the reverse mortgage, the product, what it is, and how it can benefit people who want to use it.
Well, a reverse mortgage is simply an FHA loan. You're not obligated to make any payments on it if you don't want to. All you need is insurance and homeowner's insurance. And if you'd like to make a payment towards it, you can. A lot of people use the product either to buy a new home, maybe to bridge the gap in taking Social Security later. Some people like to take it as, a security net for somewhere down the line. Maybe some people haven't planned great for retirement years, so they can use a reverse mortgage as an additional bucket to tap into.
Okay. You mentioned several great things. One thing I want to talk about is, what is a reverse purchase?
So a reverse mortgage allows you to come into buying a home and making one contribution of about 50 to 55% of the sale price, and then the reverse mortgage kicks in the remaining balance as the loan, and you're not obligated to make another payment if you don't want to.
Tell me, what kind of customer takes advantage of something like that? Is this a product whereby someone sells a house, they're going to buy something else, they already have enough cash to put 50% down, and these are the people that take advantage of it?
Yes, a lot of people take advantage of it. If you can just imagine, if you sold a house and you have $300,000 in your pocket from the proceeds of that sale of the house, and you find another house that you love, and it's $350,000, a reverse mortgage will allow you to come in with approximately 50% or $150,000 as a contribution, and then the reverse mortgage will pick up the remaining balance of $150,000, and you won't have to make a payment. Yet you're going to be walking around the next day with an additional $150,000 in your pocket because the reverse mortgage allowed you to bridge that gap.
Yeah, especially I would imagine if you're going from a state like Arizona or California or some of these states where real estate prices are high, and you're moving to some other area where real estate prices aren't that high. You can really get more bang for your buck. Plus, as you say, you don't make a payment and you've got all the extra cash in your pocket.
Yep. We see a lot of people from California right now moving to Prescott, Arizona, which is kind of the area where I work a lot.
It's beautiful.
And
Yep.
and people come, sell the home, they have $500,000 in their pocket. They find a beautiful home in Prescott that's, sale price of $500,000. They come in with a $250,000 contribution, and boom, they don't have to make no payment on it if they don't want to.
When you talk,
That's a win-win.
yeah, it's a great product. I had a friend who did it. I have a lot of friends because I'm of that age who are looking at this much more closely than they did, obviously, when they were younger, or they want to find out as much information as possible. What's the best way to educate yourself if you're looking at this type of product? Is it to talk to someone like yourself who has their certification, or is it to go online? How would you do it?
Well, there's the website, which is NRMLA, which is NRMLA.org. That's National Reverse Mortgage Lenders Association.org. That's a great resource.
Okay.
You can also check out my website, which is simplereversemortgage.net. And you should definitely look to find somebody who is experienced. Certified reverse mortgage professionals, there's only 150 in the United States. We are listed on the NRMLA website. And basically, we are people that are committed to the product and know the product inside and out.
Now, when you talk to older Americans, older people, there's obviously a trust issue. Most people, this is a decision that they're making based on their retirement, and looking further into the future, not wanting to make payments. It's different than if you're talking to a younger person who is starting out and about ready to get their first house. Give us an example of some of the differences and maybe how you prepare people for what's about to happen in terms of the payment or non-payment or the structure of the loan. What's different maybe for you in how you talk to people in the reverse versus a forward mortgage if they are much younger?
Well, it's totally two separate entities. When you're working with old, mature adults, it's more, they have to learn more about the product. We have to overcome the common misconceptions of how the product was 30 years ago. And we really need to educate them. There's a sequence of events. There's a counseling that ensures that people like me have explained the product well to the client, that we talk about how they can use the benefit, what their plans are for the future, maybe so we can help them structure a loan. There's different ways that we can structure a reverse mortgage for a client to fit their needs.
Mm-hmm.
We can help them learn how to use that product going forward, to use it as a safety net. If they'd like to, they can definitely do that. I just think it's a different mentality, and I think that when people decide to work with folks who are more mature, it takes a little more hand-holding.
Yep.
So it's a special kind of person that really succeeds and loves the product and loves the population that we serve.
Right, I agree with that 100%. I think that each segment of the population here in the U.S., they all have their intricacies or idiosyncrasies, and certainly being older, for me, it's a trust factor. I'm almost 65, so I certainly qualify if I wanted to do one, but certainly having someone understand my communication style is different than someone who's 25. So I'm going to want to talk to you on the phone. I'm going to want to have your number, your cell phone, any way I can get in touch with you immediately, and I'm sure that's all part of it.
Yeah, it's what, and with this population, I must say, we're more of the shake your hand.
Right. Right.
I'm here for you. This is how it's going to work. We're going to go through this together type of a relationship.
Yep.
As opposed to internet, or we have folks that, definitely explore and look everybody up online. And
of course.
That's all fine and great, but everyone still, we go back to the old school of business, shaking a hand, looking you in the eye,
yep.
and knowing that, you are who you say you are.
Yeah, and I think tech savviness is really across all generations, because there are people who are dumb as dirt, who don't know how to do anything, who are under 25 online or through their telephone, and yet you'll get the sharpest people in the world who can know all the tech that they need to know when they're 99. So that, to me, is, it just depends on your personality. But old school, talking to people, looking them in the eye, shaking them in the hand, I think that's all part of this, and that's what you do so well. Could you shout out your phone number and a way that people can get in touch with you, especially about this product?
Sure. My cell phone, you can call me or text me. You text 480-635-2410, or you can email me, and that's N as in Nina, H as in Heidi, PENNY @MSN.com.
Right, and you're licensed in both Arizona and California, so anybody here in California listening, give Nina a call, give her a text. Nina, thanks very much for coming on the show. Always appreciate the education and the point of view you bring.
Oh, Jeff, thank you. It was great.
Okay, very good. I'm Jeff Barton, your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929, our telephone number. And I've been telling you all week, last week, week before, save the number. You know you're going to need questions answered, and I'm the guy that's going to answer them. Or if I can't do it, I certainly know people who can. I've been in this business for a long time. I've been a broker for both real estate and loans in many, many different states. I am now, of course, a lender in many states. So I have some experience at trying to solve problems. And I think that's one of the main things I like about the business. Yes, there is some drudgery to it. And what I mean by that is the regulatory aspects of the business, the oversight aspects of the business, the way that you're treated on the one hand from the government entities who control you, yet at the same time, it's very laissez-faire, hands-off. So, all that aside, the solving of the problems of the person who needs it solved. Now, I had a client call me the other day and was very, very upset and was irate enough to start the conversation at the higher end of their register, meaning that there was screaming going on. And I was not prepared for it. So midway through the actual conversation, I asked the person if they would please just, speak to me in a reasonable tone, and I'd be happy to help them and solve whatever I could solve. And on the tag of that, I said, what is it exactly that I can do for you? Now, in any conversation that you have with someone, if you're reasonable and, able to explain the situation, most people in my business are going to help you. Why? Because it's in my best interest to help somebody. However, if I have a heightened sense of voice constriction by the person who's calling me, and there is an urgency by which they have in terms of getting something solved, it's difficult to understand what it is I can do unless I get, okay, the docs are supposed to be here, or my credit report is not right, or, the disclosures that were sent out were wrong. I mean, something that I physically can do about the actual. Anyway, I asked the person to calm down, and they said no, and it didn't end well. So we had other people get involved, and this is part and parcel to the stress in any real estate situation, especially when you've got contracts, you've got people who are demanding from you, and as a consumer, as a borrower, as a buyer of real estate, I know it is not simple, and I know it is not easy, and I know the stress is on you because, as we said earlier in a segment earlier in the show, if you're a parent and you're working, and you've got deadlines to get somewhere before school starts, and you've got somebody you just can't get a hold of, which was not the case, but at the same time, this was the issue at hand, you are going to get stressed. And because we're in the business, we're used to the stress. Doesn't mean it's easy. It just means that we're able to work through it and get solutions done. So my advice to anyone out there who's in a position of stress because of the nature of either the deal, the broker, the real estate, the kids, the house, anything that you've got, take a breath. Make sure that when you make that call, even if you're strident in your tone, in your voice, that the information that you need is first and foremost upfront and delivered. Because a professional like myself needs to know what they can do in order to be effective at solving the problem. Obviously, my client had difficulties getting approved for a loan. And that was the issue for many, many months. So it wasn't as if this person was ignored and somehow we were in the deal and deadlines weren't being made. No, it's the fact that the actual loan that they were applying for, or any loan that we could get them, was difficult because they didn't qualify. There are many situations where a borrower will not qualify. However, they have needs, they have wants, they have real estate agents showing them property, and they have everything else that goes along with wanting a house. In this market, it's difficult because of the fact that real estate prices are going up. Now, obviously, that's offset some because we have falling mortgage rates, which really just took place in the last 6 months. I'm very happy that that's taken place. But you still have the issues of ability to repay rule. That is never going away. So if you're applying for a conventional loan, FHA loan, a VA loan, you're going to have a ability to repay rule, which means that the likelihood of your job, the likelihood of your income lasting for 30 years is calculated into the underwriting guidelines. That's first and foremost. Then they set your debt-to-income levels and your loan-to-value levels. All of these things fit into the puzzle which makes you you. Now, because of the fact that we have a great and expansive marketplace out there right now, a lot of loans can be gotten, but you still have at its core, can you repay the loan? The ability to repay. Even in a non-QM loan, like if you're doing a bank statement loan, if you're doing a business bank statement loan, if you're looking to qualify based on the equity in your home and your FICO score, i.e., I got a 750 FICO score and I have 50% equity in my home. Well, if you're over 62, as we just learned in the last segment or two, you could get a reverse mortgage and never pay another payment in your life if you had 50% equity in your home and you had a FICO score like that. The only thing in a situation like that you really have to prove is, can you pay the taxes and can you pay the insurance? These are new items that were tacked on about 18 months ago, but most people can do that. If you have a situation whereby you have a business that's thriving, but you don't pay a lot of taxes. Why? Because you do a lot of business write-offs. The car that you're driving, the rent that you're paying, all of these things add into business expenses. However, the business bank statement loans are those loans which say, what is your cash flow on your business every month? That's what we're going to use as your income. That's what we're going to use to qualify you. Now, in those cases, yes, that's different from your conventional loans. So you're going to be paying a higher interest rate. But because interest rates have gone so low, what is that high interest rate versus a 3.6 or 3.75% conventional? Probably 4.25%, which 8-9 months ago was the conventional rate. So really what you're looking at is something which is very low in terms of rates on a non-QM. The question is, on your debt-to-income ratios at something like that, can you qualify? All of these things were considered for my particular client when we were out there trying to help that person get a loan. Unfortunately, none of them worked, and that's a possibility out there. Unfortunately, as we said, real estate prices are going up, and we didn't think that would happen at the beginning of the year. We've talked about it before. What we thought was going to happen was we would get an expansion because the interest rates went up of the houses that were available on the market. Well, the reverse happened. Rates went down, no new houses were built, prices went up. Okay, so this is the unpredictable nature of both the economy and this particular time we live in. I mean, we just cannot predict, the next, I guess, downturn in the economy, although we've been hearing that one's coming, although all of the economic indicators that I see, meaning what I see today based on what happened 3 months ago, because that's the way it goes quarter by quarter, looks like, unemployment's down. The level of pay has gone up by 3% this year so far, which is a good thing. We've got delinquency rates. That's the one thing that I've noticed. The two things that I've noticed in the economy, delinquency rates, they've gone up a little bit. And also the dreaded inverted yield curve, meaning that the 3-month Treasury bill is going to be priced higher than the 10-month Treasury bill. Now, should that make sense? No, it shouldn't. That's what they call the inverse mortgage yield, not the mortgage yield curve, but the bond yield curve. And that's a precursor to what happens in the future with the economy. However, everything being equal, it's a fascinating industry to be in. Great time to get in because of the mortgage rates. And give us a call, 888-713-2929. Thanks for listening to the show this week. I'm Jeff Barton, your voice in the mortgage industry. We'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.